You know what's interesting with Apple is forever, and I think that, outside of people trying to short the Japanese yen, analysts that have been negative on Apple has been the other widowmaker trade. It just hasn't worked. And I think that if I want to go back a year and a half ago and think about why did I trim Apple, I think the one thing is that if you look at their revenue and earnings growth prior to this year, really most of their growth had been from stock buybacks. And so I think that was the narrative from the analyst community of why Apple shouldn't be at the multiple that it is. But I just think you have to respect the market. And I think what's happening right now is that there's so many hedge funds and algorithms, and I'm sure individual investors that have been selling those high growth names as they're worried about inflation and interest rates. And I think that people are moving into Apple because there's so much certainty around cash flows. I mean, it's such a comfortable stock. Everybody owns it. Everyone has an iPhone. And so I think you also have some repositioning out of those high growth names. People want to stay invested. And Apple's been a lot of the recipients of those high growth dollars that have come out of those names.
No, but Carrie, I just heard, since Jim Cramer mentioned you, let's mention Jim Cramer once again, because I just heard two people violate Jim Cramer's #1 rule of investing in Apple, and that is don't trade Apple. Invest in Apple. Don't play around. Don't mess around. Don't try and get out at the top or buy at the bottom. You own Apple. What do you think?
Yeah. Well, we all own Apple. And remember, Apple is 6.5% of the market. And when we talk about Apple, it represents the biggest commitment that people make to the stock market. And as others have said, I mean, Bryn just said it, people take money out of other names and buy Apple. Now, if you look at what's happened in the last month, less than a month, Apple's up 19%. And what's gone on in the market during that period of time is there have been huge sell-offs within technology. Apple's own sector, which has been moving up, but a lot of high-tech names have had really volatile swings. Some of it's tax loss selling, but that money has gone to safety. It's been defensive, staying within the sector, and Apple represents an incredibly strong, well-known, safe, and growing company. No one's suggesting that people bought it because they just discovered Apple. They know it. And we believe that there's always going to be this commitment to Apple by investors to keep their money there while they're waiting for something else, which is a good reason not to get out of it. But I think that Jim is right. You can trade around it. If you have a 6%, 7% position, you can trade it down if you feel comfortable with other ideas that make more sense and have more upside, and then buy it back when Apple falls to within the very attractive range. And it has done that many times over the last 5 years. So I think it's great to own it. It's a receptacle for cash, but it's all right to trade around it sometimes. It's not like, verboten, you can't.